Okay, so if you're trying to make sense of the GTA housing market right now by looking at the headlines, you might be pretty confused.
Yeah, it seems contradictory, right?
Exactly. Prices falling, but sales numbers are actually climbing year over year. What's really going on?
Well, the confusion, it sort of hides what's actually a pretty clear picture now. The
Yeah,
GTA is um, definitely in a buyer's market, no question.
a buyer's market. Okay.
And it's driven by two big things. Supply levels that are, frankly, historic and weakening confidence in the economy.
Right, and that's not just local jitters. We're talking about some serious economic headwinds here. Let's dig into those macro pressures first. What's really hitting buyer confidence?
Well, a lot of it starts, higher up. Those escalating U.S. trade tensions, they've really tanked business and consumer confidence. We're seeing like historic lows.
Wow. Oh,
And that kind of widespread uncertainty, it makes people hesitant. They postpone huge financial decisions like buying a home.
hmm.
Makes sense.
It does. So global trade worries creating anxiety, and then closer to home, the job market's feeling the strain too. August unemployment was at 8.9% here.
Yep, 8.9%.
And on top of that, the Bank of Canada is keeping rates where they are because inflation, that underlying inflation, is just sticky.
It is. It's not going away easily.
That whole combination, it just kills confidence, doesn't it?
Absolutely. And this difficult backdrop, it leads straight into that data paradox you mentioned earlier.
Right.
Let's look at the numbers.
Yeah.
The MLS Home Price Index, the HPI benchmark, which is our best measure for a typical home's value, not just an average.
Right. Avoids the skew from luxury sales.
Exactly. That HPI is down 5.5% compared to last September, so prices are lower.
But, and here's the contradiction, total sales activity is up 8.5% year over year. So how does that work?
Yeah, that surge is key. It isn't really a sign the market's suddenly hot again. It's more about affordability kind of snapping back a bit.
So lower prices combined with those rate cuts we saw earlier.
Precisely. It pulled some buyers who were sitting on the sidelines back into the game. But, and this is crucial, the market still can't absorb all the houses coming online.
How do we know that for sure?
We look at the sales to new listings ratio, the SNLR. Basically, sales divided by new inventory.
Supply versus demand. Got it.
And right now, it's just 29%. Anything under 40% signals a buyer's market. 29%. That's deep buyer territory. Very deep.
Okay, so the overall picture is definitely leaning bearish. But you mentioned sources show a big split depending on the property type, houses versus condos.
Huge difference. The freehold segment, so detached, semis, townhouses, it's holding up much better. It's more resilient.
Why is that?
It's mostly driven by end users, families buying a place to live.
Mm-hmm.
And for many of those house types, affordability has actually improved quite a bit, maybe over 20%, factoring in price drops and slightly lower borrowing costs from earlier.
Okay, so houses are one story, but the condo market sounds like it's in serious trouble, like acute freefall.
That's not an exaggeration. There's a massive supply crisis happening as new buildings are completed, and it's hitting right as investor demand has just collapsed.
And investors are key for condos, right?
Absolutely critical. They make up something like 70% of condo purchases historically. So when borrowing costs shoot up and rents maybe aren't keeping pace, they get out fast, and that floods the market.
And that distress, we're seeing it in the foreclosure numbers. I saw a stat about power of sale listings.
It's staggering. Power of sales in the GTA, that's when the lender forces the sale. They've surged almost 100 times since 2020.
100-fold since 2020. That's wow. That really highlights the pressure, especially in the condo sector.
It really does. And you see it in how long things take to sell, too. Average days on market, 51 days now. Buyers can take their time.
Okay, let's shift to strategy then. If you're listening, what's the main takeaway for, say, a buyer right now or a seller?
For buyers, look, this is a pretty rare moment. You've got record inventory, way more choice, and real negotiating power. It's a window.
And for sellers?
Get realistic about pricing. Fast. Trying to get prices from, the peak in 2022 or even early 2023. Your place is just going to sit there. It won't move.
So summing up the short term, definitely bearish. Prices likely drifting down into early 2026, maybe.
That seems to be the consensus, yes. But there's a huge potential twist coming down the line. A future risk.
Oh, what's that?
All this pain today, especially in the condo market, it means developers aren't launching new projects. Pre-sales for new condos have basically dried up.
Okay, so the future supply pipeline is emptying out.
Completely. So think ahead. when interest rates eventually do come down and all that pent-up demand comes rushing back.
It's going to hit a market with very little new inventory coming online.
Exactly. You could see really sharp, significant upward pressure on condo prices, maybe starting in 2026 into 2027. It's that pendulum swinging hard the other way.
So today's buyer's market and condo stress could actually be setting the stage for a major condo supply crunch and price surge in just a few years. Something definitely to keep in mind.
Definitely something to watch.
A fascinating look at a complex market. Thanks for breaking that down. We encourage you to really think about those longer-term supply issues stemming from today's conditions.